Welcome to Explain the Charts. Today, September 19th, 2025, we're diving deep into Intel Corporation, ticker Intel, which has seen some truly explosive movements. Just yesterday, September 18th, Intel stock surged dramatically, a move that's sending shockwaves across the entire tech sector. The primary catalyst for this massive spike was the announcement that leading AI chip maker Nvidia will take a substantial $5 billion stake in Intel. This isn't just about money, it's a strategic partnership for joint development of custom data center and personal computer products, fusing Nvidia's AI stack with Intel's x86 architecture. Analysts are calling this a game-changer and a huge deal, positioning Intel front and center into the AI game after years of struggle. This Nvidia investment follows a significant $9 billion investment from the U.S. government just last month and an additional $2 billion from SoftBank, totaling $16 billion in outside backing. Such massive institutional confidence, especially from the U.S. government, underscores Intel's vital role in national security and its strategic importance in the global semiconductor race against competitors like China. Furthermore, just 4 days prior, Intel stock also saw a 5% bump after announcing a major cost-cutting initiative and selling a majority stake in its Altera business for $3.3 billion. These financial discipline measures, spearheaded by CEO Lip-Bu Tan, have clearly been well received by the market, signaling a more focused operational strategy. Now, let's turn our attention to the charts to see how this news has manifested in price action. We'll start with the daily chart for Intel to get a broad overview of its trajectory over the past year. Looking at the daily chart, we can observe that Intel had been in a prolonged downtrend for much of the last year, reaching a 52-week low of $17.665 back on April 8, 2025. However, the past few months showed signs of stabilization, forming a base around the $24 level. Notice the candle for September 18, 2025. It's a monumental gap up, reflecting the pre-market enthusiasm surrounding the Nvidia news. Intel opened at $31.78, a roughly 27% surge from the previous day's close of $24.9, which is perfectly aligned with the news reports of a 27 to 30% spike. The price reached a daily high of $32.377, officially marking a new 52-week high for the stock. However, the close at $30.57, despite being significantly above the previous day, shows some profit-taking pressure throughout the trading day. This indicates that while the initial reaction was overwhelmingly positive, some investors quickly moved to lock in gains. This gap-up action on extremely high volume, topping 523 million shares, is a clear bullish reversal signal, breaking decisively above prior resistance levels that have held for months. The previous resistance around $24.9 to $25.2, where the stock struggled to break through in August and early September, now turns into strong support. This level, coinciding with the pre-surge closing price, will be critical to watch in the coming days. Let's zoom in on the 15-minute chart to dissect the intraday action of this incredible surge on September 18th. On the 15-minute chart for September 18th, 2025, we can vividly see the sheer force of the buying pressure. Before the market opened, we closed on September 17, 2025, at $25.01. The first 15-minute candle on September 18th, at 7:52 Universal Time Coordinated, opened higher at $25.08, already signaling a gap. However, the truly explosive move started around 10:52 Universal Time Coordinated, with a single 15-minute candle opening at $25.20 and rocketing to a close of $29.56, representing a 17.3% jump in just 15 minutes. The momentum continued with the next candle pushing the price further to a high of $33.43 around 11:52 Universal Time Coordinated, an incredible display of bullish sentiment driven by the Nvidia news. This intraday high briefly exceeded the reported 52-week high of $32.377, indicating extreme volatility and rapid price discovery. Following this intense ascent, we see subsequent 15-minute candles exhibiting downward pressure, with noticeable selling volume as profit-takers stepped in. The price found some initial support around $30.16 during the trading day, bouncing off it several times before settling slightly higher. This 15-minute granularity clearly shows the immediate market reaction to the news, validating the significant pre-market gap up and the intraday profit-taking. Now, returning to the daily chart, let's analyze the overall implications. This surge represents a strong bullish reversal, breaking a downtrend that saw the stock shed a significant portion of its value. The volume accompanying this move is also highly significant, indicating strong conviction from institutional players and a potential long-term shift in sentiment for Intel. For short-term traders, the key levels to watch are the immediate support at the intraday low of $30.16 on September 18th and the high of $32.377 as resistance. A sustained break above $32.377 could quickly see the stock retesting higher levels last seen in mid-2024, potentially around the $34 to $35 range. Conversely, if the stock pulls back and breaks below the $30 mark, the former resistance zone of $24.9 to $25.2 would act as a crucial psychological and technical support. Failure to hold that could indicate a fading of the bullish momentum. From a long-term perspective, the Nvidia partnership is a massive strategic validation for Intel, moving it beyond direct competition in AI to a collaborative role, potentially expanding its market reach and profitability. This strategic shift, combined with aggressive cost-cutting and prior government investment, paints a more optimistic picture for Intel's future, especially in the burgeoning AI market. Reasons to be bullish include significant outside investment, strategic pivot towards partnerships, a validated turnaround strategy, and renewed focus on financial discipline. The U.S. government's stake also provides a layer of national interest, potentially mitigating downside risks. However, investors should remain cautious. Intel still faces immense competition from AMD and TSMC, and execution on these new partnerships is paramount. Past struggles with market share and manufacturing efficiency are not forgotten, so sustained positive news and earnings will be necessary for long-term growth. A bearish scenario could unfold if Intel fails to execute on its joint development with Nvidia, or if macroeconomic factors negatively impact the broader semiconductor industry. A sharp reversal could also occur if the market perceives the stock as overextended following such a rapid ascent, especially if it fails to hold the $30 support level. In recap, the critical price levels for Intel are the immediate support at $30.16 and a stronger support zone around $24.9 to $25.2. Key resistance levels are the recent 52-week high of $32.377, with an intraday spike high observed at $33.43, and then the historical resistance around $34 to $35. We predict that the likelihood of Intel maintaining its bullish momentum in the short term is moderate to high, probably around 70%, provided there are no immediate negative news catalysts. This would be reinforced by positive analyst upgrades and continued high trading volume. For the long term, the outlook is cautiously optimistic, perhaps a 60% likelihood of continued growth, but contingent on successful execution of the Nvidia partnership and sustained improvements in Intel's foundry business. Watch for any further announcements regarding joint product development or new government contracts to reinforce this bullish thesis. Conversely, a break below $30, followed by a retest of the $25 support, would increase the likelihood of bearish sentiment prevailing. The market will be closely scrutinizing Intel's next earnings reports and any updates on its strategic partnerships. Keep an eye on competitor news, particularly from AMD and TSMC, as any developments there could also impact Intel's performance. Thank you for joining Explain the Charts for this deep dive into Intel. Make sure to subscribe for more in-depth market analysis.